You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by SIBO. When it comes to trading volatility, trust SIBO, the creator of the VIX Index, for in-depth and relevant information. SIBO's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network, the old Options Insider Radio Network, upon which Vol Views and so many other programs flow down the river to you. Got Option Blog, Visors Option, Daily News, all sorts of fun stuff. No matter which flavor of options you're into, maybe you're into futures options, TWIFO is the show for you, coming up live in about an hour and a half here on the network and wherever you find your podcasts, of course. Check them all out. The mothership, the website has it all. iTunes, TuneIn, Stitcher, all that good stuff. Also via our mobile app, so if you're tired of, let's say, the iTunes podcast app, which is terrible, or maybe you're on Android and you just can't figure out which one you want to use over there, grab our app. It's all in there. And, of course, while you're using the app, you can also hit us up. Questions, comments, insights, pearls of wisdom, it's all baked in there. All of our social media, our email, our website feedback, all that stuff is in there. You can hit us up. Some of you hardy ones can even call us if you are indeed so inclined. And if it's good, maybe we'll even play it on the show. So keep that in mind when you're leaving your messages here. And, of course, you can always join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr. You can hear the raw goodness that is Vol Views Live. So if you're too impatient, you can't wait for the nice edited version to come out the next morning, well, then, of course, got you covered with the live version there over there. Mixlr, and the good thing about that is if you tune in live, you can also ask us live questions about whatever is on top of your mind, and you guys do. You guys all sorts of great and interesting, many and varied questions, shall we say. Keep those coming. We do love to hear from you guys. And joining me on the program today, we got a nice little shakeup on the old panel today, which is always fun to keep things fresh and rolling. Let's start off all the way out in the hinterlands of these fine United States. He's pretty much almost in Canada, listeners. He is the rock lobster himself, Mr. Andrew Giovinazzi, coming to us from the very shores of Maine, taking a break from his lobster fishing to talk to us here today. Mr. Rock Lobster, welcome back to Vol Views. It's been a while, sir.
It has been. It has been a while, and I would almost say Ziploc fresh. That's super fresh.
That is
Ziploc
very fresh. Now, you remember what we do here? This is where we view volatility. You got that?
I spent the morning with my volatility goggles on, just for this show. Just for this show, I put my vol goggles on.
You got the nice VR goggles for volatility, huh? That'd be
they
fun.
have big V's imprinted in the front of the glass. It makes it kind of hard to see, but you got to deal with them.
I'm still waiting for the old Acumen stuff to come on the old VR servers. That would be awesome. I would use that in a heartbeat. That would be really cool. And
it would be nice. It would be nice for me too.
It'd be a little intimidating to see those huge spikes of unusual activity coming at you, but it'd be kind of cool at the same time.
You just duck.
Woo-hoo. Yeah, there you go. When when you're ducking fast and furious, that it's a good day out there in the options market. If you don't know what we're talking about, listeners, look it up. Acumen, AQUMIN. It's cool stuff. And it's good for you to go out there and you can find vol, you can find changes in unusual activity, all sorts of fun stuff. Cool stuff. Mr. Rockloss, I should say, uses it on a regular basis still to this day. And continuing our host shakeup, we said to the old guys, get the hell out of here. We're done with you guys. We want to mix it up a little bit. Actually, Mr. Rhodes is on assignment yet again. He's traveling hither and yon these days. So filling in once again, doing his ableist Russell Rhodes impersonation is Ophir Gottlieb, coming to you from the home of options backtesting over there, CML Viz. Ophir, welcome back to the Volatility Views program.
Thanks. Yeah, I only come on when VIX hits multi-decade lows, so you guys called me.
There you go. It's perfect timing. See, we have actually some stuff to talk about, which is nice. And one of these days we'll get you on that uber advanced technology known as Skype, and you'll sound so beautiful. Meanwhile, we got to struggle through with the old Alexander Graham Bell tech, but we'll do what we can. Meanwhile, we got to keep on rolling. It's time to dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Like the man said, it's time for us to break down the week that was and indeed still is from a vol, trading, and trending, and all sorts of perspectives. And what an interesting week it has been. We are recording this and indeed streaming it live Friday, July 14th, right around noon Central, so right around the middle of the session here. And we're seeing a general upswing on most of the major indices. The S&P up about 1/3 of a percentage point. The Dow, a bit of a laggard, only up about 1/4 of a percentage point or so. And the tech-heavy NASDAQ leading the charge up over 0.5%, about 0.6% right now. And as we all know, VIX has already taken a drubbing towards the latter half of the week, and now that we have all this green on the screen, VIX still continuing, as Ophir mentioned, to threaten those aggressive lows. Let's see, how low did it get? To 976, so we're bounced right off. It's at 977 right now, so one tick above the lows there. But impressive stuff. I know Mr. Rhodes is kicking himself that he can't be on here to discuss these historic lows. But it has been an interesting one. Of course, we saw last week, it seemed like a little bit of juice was creeping back into the old mix. We had our old friend there in North Korea rattling some sabers, launching some missiles into the waters, and that always tends to conspire for a little bit of juice in the old space. We had Miss Yellen do her able best this week to try to mix it up again, get a little bit of spice, a little bit of vol back in there. Market wasn't buying what she was selling. And of course, whatever juice came in as a result of our friend in North Korea was quickly squeezed out, as we've seen out there in the vol space. There is no reluctance to hit a bid out there in VIX land. I think even Russell said on the show a week or two ago, where pretty much the VIX has evolved to the point now where if there's a bid in there and you got to hit it within minutes, even if you wait hours, let alone, you used to be able to wait days or weeks. Now you got to wait. If you hit it within minutes, if you wait hours, it's already too late, let alone days or weeks. Things are crushed so aggressively out there. And we saw that play out again over the past week. And again, this week as well, as we saw, no love for the vol space out there today. Let's kick it off. Ophir, you are our go. We're threatening even new lows as we're talking here. Vol continues to erode. So all sorts of good stuff going on. Ophir, you are our guest, so I will give you pride of place. Last time you were on, you were talking all things upside call spreads and VXX and selling those. What was catching your eye this week from a volatility perspective?
Just the market's unending ability to price no risk into the market. And so it's got to be now that if you agree with this VIX, which it seems like it would be a time to agree, you have to just look. The market has no real risk factors coming in, so you have to look sort of geopolitical, right? You have to believe that there is going to be no North Korean military action, or there's going to be no shakeup in the White House, or there's going to be no trade wars. And if you believe all of that, which is quite possible, or if you believe if any of that happens, it doesn't affect the market, then yeah, there's no reason for the VIX to go up other than some exogenous factor. Why will risk come in the middle of July through August?
Yeah, why would that ever happen? These are, as you mentioned, these are not exactly historically bullish periods for vol anyway. Midsummer, Usually in August, we're starting a little early now, but still mid-July into August, usually a time when people are on vacation, the market kind of quiet, and vol tends to seasonally erode on its own. So you already have a bit of a headwind against the VIX this time of year. Anyway, now combine that with the fact that I think we've said on the show before, I think it was your cohort there, Mr. Meatball out there, Andrew, who was saying everyone and their grandmother out there is pretty much shorting this VIX out there these days. And that seems to be the case because every bid gets crushed instantly. So with everyone and their mother now shorting vol, waking up over the past year to the magic that is selling vol, then all of a sudden we have those kind of that confluence of events coming together at this seasonally low time anyway. It seems like it's a tailor-made recipe for some historic lows out there in yield VIX Cash. We shall see. Maybe we'll even set one of those today. We are flirting with them. Mr. Rock Lobster, a lot of things have been popping off this week. What's catching your eye out there in the volatility space, sir?
Well, I think the biggest one was the Fed chairman comes out and gives us sort of that smoothie interest rate rise kind of happening, kind of buying back, selling our assets, all of that kind of stuff I view it as it adds layers of certainty to the market because the Fed's sort of telegraphing what they're doing. You know how stocks like that. They like to see consistent things happening in the future. Anything that takes some uncertainty out of the market, usually vol goes down. I mean, it's as long as I've been doing this, that's what happens. So that's what I think was one piece. We're looking for earnings to come out. The bank earnings came out. They were okay. I don't think they were great enough to really rip prices higher, but they're already trading at, close to multi-year highs. So they would have had to been fantastic. But they were good enough. I mean, banks are making money. It looks like they're starting to lend again, which that's good. So all those things are kind of conspiring for low VIX. I will point out a couple of things, and this is something I have not seen actually when VIX is this low in a while. You did point out a thing about there was a reporter from William Blair guy about we haven't seen vol this low in the 60s or 1994, which coincidentally were the beginning of really big bull markets, by the way, yep. In case you're scoring at home. So that was, but when you I'm looking at volatility of the SPX, which is just outside of the VIX calculation. Actually, I should say it's inside of the VIX calculation. I'm looking at volatility into mid-August in the 6 handle all the way until August 9th cycle. 676. And funny enough, the implied volatility in the SPX is actually lower than trailing realized vol right now. I think this might be the only time in history that Schlesinger would buy, Don would buy juice.
I think he would say he would not sell. I don't think, and I'm sure he's listening and he will be suitably outraged when he hears you say that. But yes, he would say he would sit on his hands and not sell that vol. But yeah, I don't know if there is a scenario, barring some weird aberrant period where somehow the market is shooting up and down hither and yon, realized vol is at 1 million, and yet somehow implied hasn't budged. That's the only scenario where I could see Don actually buying a contract. Outside of that,
one vol.
Yes,
one vol. He will buy one vol.
You will buy a one vol. Anything beyond that, you don't know. If you're not familiar with what we're talking about, listeners, go check out the archives of Volatility Views. Go back a few years to my old co-host, Mr. Don Schlesinger. He of realized vol fame / infamy. And not a big fan of buying vol, shall we say. But yeah, that's interesting stuff. But you're right. This is a weird kind of environment. We were joking earlier. And that quote you were referring to, that was from a guy named William Blair, who runs the allocation strategies over there. William Blair, the appropriately named William Blair Macro Allocation Fund. I like people who name these things after themselves. Very creative. Saying he's the one who pointed out, over the past 50 years, but only 2 other periods, the mid-60s and 1994. It doesn't say exactly when, the mid-60s, so maybe 65, 66, take your pick, 64, where realized vol for the S&P was at or below current levels. So we are flirting with some historically interesting / perhaps potentially dangerous levels out here in vol space, because, it does imply a bit of complacency where as Ophir mentioned, there are some things lurking out there in the ether, out there in the woods that you may potentially want to be concerned about or indeed interested in. What about Ophir? I know you like a lot of single names too. What about earnings? In the last few cycles at least, if those are any predictors, some people have kind of held on to this hope that earnings are going to come in and inject some blood, inject some life, and inject some volatility into this marketplace. Last few quarters haven't really seen too much of that. Are you holding out any hope this cycle that earnings may be the shot in the arm that the volatility needs? Or do you think it's going to be another kind of resounding meh?
I think generally we're headed for meh. I think, I'll tell you this much, VIX, vol in general has gotten low enough that I see opportunities in owning the vol, not through earnings, but ahead of earnings. So let's say an at-the-money straddle in a 30-day option 2 weeks before earnings, let it run up to the day of earnings and then closing it. After earnings, I don't think so. I will say this, there's one more risk broadly to the market than all of these exogenous factors, which is that I saw something from Ryan Dietrich said something like the average drawdown on the S&P 500 per year is around 14%. That's 13.8% or something. And our drawdown this year was 2.8%. I think we have a hypersensitive sort of investing world out there. I know when the market was down a little bit, people were freaking out. And in retrospect, it was really a little bit. So if the market goes down 5% or 6%, maybe that reverses VIX aggressively out of in fear of seeing something we're just not used to seeing. But that's pretty much it. I don't think earnings will do a whole lot other than a normal, vol rise and crush. And again, I actually see vol as cheap going into earnings. That's my best guess.
Mr. Rock Lobster, that sounds surprisingly like a strategy you like to advocate here on the show quite a bit. We talked about it, I think, last time you were on, maybe a few episodes ago, where you like to come in. I think you said last time you like to set it up so it's about actually a little farther out than I thought, about 3 weeks out ahead of the event, and kind of ride that in all the way in till a few days, maybe the day of the event itself, and then close it out. You get a chance to take advantage of, the very least, some very reduced decay, and maybe you get a nice free swing at the bat. If something crazy happens in the underlying, you get to hedge that, lock that in. Is that how you're looking? Are you agreeing with Ophir here? This may be a good setup for that strategy?
I am. Also, it's another thing in our chat room where, you remember we just had this thing where they kind of rallied the banks this week into the earnings. Now they're looking like everybody's kind of getting hot for technology stocks into earnings. The only time I think that's a little different is just on some of the bigger, maybe on some of the bigger vol names. I kind of like the ones where the vol starts a little cheaper, where they never really bid it much. More like S&P 500 style volatility, where, we do get a little lift in the market, and the gamma and all that stuff pays pretty easily. So I would have to say, yes, I would agree with that as an idea. I'm also looking at longer term Vega, like 6 months out for a lot of the ETFs and stuff like that, because most of them are hitting multi-year lows. And you just also that's another opportunity where you just buy them and just sit on them, because there's almost no decay, relatively small. And if the market does actually, even if it just grinds higher, you just kind of dump your calls and they pay. So I would say either of those things where you're kind of trying to cheat, you're trying to cheat the theta monster when you have a sub 10 VIX is not a bad idea. So those are perfectly acceptable ideas to me.
Cheating the theta monster. I like that. Is that what you're going to call your webinar? You should call it that. If not, that's a webinar I would subscribe to.
I might slip that in as a slide.
I like that. There you go. See, coming up with all your marketing tips here on good old vol views. And we were talking last week on the show about some of the interesting differences between VIX versus, let's say, the NASDAQ vol of the VXN. VXN coming off quite a bit. VIX has come off quite a bit as well, but VXN coming off even more, off about 3 points from about last week. It was about 17 or so last week. Right now, hovering right around 14. So a lot of that discrepancy, that kind of aberrant state that had popped up there where NASDAQ was uber volatile and VIX kind of not so much. A lot of that has come in. There still is a bit of a juice there, but not as much to squeeze as there was even a week ago, let alone earlier there, where NASDAQ was really taking it on the chin, kind of almost of its own way and apparently different from the other indices out there and getting a little bit of some interesting juice out there, but not so much these days. Skew index also creeping up a little bit, which is kind of interesting, about 138, almost 138 and a half out there. So that's about 11 handles higher than where it was a week ago on the show. So maybe something interesting, you guys out there who watch indices like that, and obviously take that with a grain of salt. That's a one number trying to convey everything that's going on with the skew of the S&P 500. As we all know, those two arms move independently of each other. Sometimes the puts have their own life, the calls have their own life. So you have to kind of do a little bit of your own due diligence into what exactly is causing that number to spike. It's not just puts are expensive, calls are cheap. A little more to it than that, but still something worthy of note if you use that in your indicators. Getting a little bit rich. It's not quite in the crazy town levels where it is like 150, 155, where you're like, hey, something's up. But it's starting to creep up for all of you who watch that. Speaking of creeping up, the VIX futures, that term structure has been creeping up, at least the front portion getting a little bit steeper. A lot of that, of course, due to the fact that the cash has been annihilated yet again. It was pretty tight on last week's show. Now it's getting a little bit wider out there. The front month about 1.25 handles or so away from the cash. 2 months out, about 2.5. So pretty steep discrepancies. Surprising the fact, given the fact that July, that front month's going away pretty soon. So interesting to see how that's holding up. I think some people out there are looking at some charts. There's a chart out there I saw, and I think we'll include it in the show notes, showing that I think it was from VIX Central, those guys, who were saying the term structure even below the lows it saw recently back in July of 2014. So the term structure out there, kind of worth watching. We've joked on the show in the past, the answers to all volatility questions lies in the VIX futures term structure. It's something maybe you want to pay attention to. Speaking of which, speaking of historical levels, we saw the lowest settlement out there for the August VIX contract out there was the current low, or the previous low was 1221. It hit 1220 the other day. So there you go, setting new lows across the board out there. And if that wasn't enough VIX futures juice, we had the Typhon boys on a couple episodes ago, and they put out an interesting little bit. They live, eat, sleep, and breathe the VIX futures out there, and they posted an interesting chart. We'll have to retweet it out there, put it in the show notes for you as well. They actually went back and ran the numbers, did a nice little linear regression on the old VIX, and looking how it would look during the 87 crash and how that would look, the futures actually. And an interesting chart, 72% gap they're showing on the day of the 87 crash itself, and then up 240% at the high portion of the madness out there. So interesting stuff. We'll include that out there. Give them a follow if you're not doing so. Interesting stuff. Mr. Rock Lobster, anything out there surprising you in the VIX futures term structure? I know it's been an interesting beast to watch of late. Any of these nuggets catching your eye?
The one thing in the VIX term structure is that at least for right now, it has what I would say kind of a normal contango. It's not, they're not, usually with around this point of the cycle, there's the futures are kind of a certain amount over the cash. And even with VIX at 974, it's very normal. It's not, the front month isn't $3 over. They're basically the future traders are not putting any extra premium in the futures, even with VIX. We have a definitely weekend effect and stuff like that right now, but they're not putting what I would say, they're not putting like an extra dollar into it. There's no extra future premium. So at least, how I look at VIX futures, it's kind of, even with VIX very low, the attitude from the future trading is kind of normal. So they're not adding any extra juice in it. There's always, when vol is generally kind of low, there's always some future premium, and they're just keeping kind of that normal premium. They're not going out and adding a whole bunch into it. So it's a very normal low vol environment, like basically was I had in the early part of my trading career in the 90s. That's just low vol kind of was how it was, and then we could be like that for a while. I don't know if we will be, but there's nothing that says just because the last 8 years have been really volatile that the next couple of years have to be. So just keep that in mind. But for right now, future traders are treating this as just normal. Nothing out of the ordinary. Just it's low and ho humpy doo. That's what it is.
Yeah, I think if you told some people out there that, we'd have all these crazy macro factors at work, we have, of course, the legion of tweets coming out of the administration on a daily basis. You got North Korea, you got all the brouhaha over the Russia investigation, you got earnings coming up, a bunch of other things, and you mix all that into the bowl, and that, the VIX Augs futures would be hitting a new contract low. Some of these things may not compute for a lot of people out there, which is always interesting and indeed worthy of future analysis. Ophir, I know you're not hardcore on the futures, but I'm sure you at least pay a passing glance at them every now and then. Anything lining up out there in VIX futures land or in any of the other volatility futures that are kind of interest or worthy of note to you? And what about some of these data points we're talking about before, like the analysis of 87 and just the fact that we're hitting these historic lows in some of these contracts? Is any of that maybe causing the hair on the back of your neck to stand up a little bit?
Well, I mean, I'd agree with Andrew. It's just the malaise now has spread to the futures. It's I would say abnormally normal almost. Also, I think as of right now, we're printing at an all-time low for VXX. I'm trying to look it up. But the term structure is just, it's priced for so much calm that the trade has just continued to work. So I think we're set. I think if anything happens, I don't know what happens mean, or I don't know what anything means, but it's not going to be yellow, and I suppose it would be exogenous. I think we could see a pretty abrupt change in the term structure, but for right now, I agree. It's like it's unusually orderly, almost like all the futures are they're headed into a club, and there's ropes around the line, single file line, please. It's all just it's like a beautiful contango and beautifully frightening, really.
Unusually orderly. I like that. Maybe that's a good title for the show. VIX Futures. Unusually orderly. That's a good way to describe it. There aren't really many other ways you could describe it. It is weird stuff, but it is very ordered, very measured. This continued erosion of all things of volatility. You guys out there have some thoughts on this? You have some questions? You have maybe, I think this vol should be more expensive. Here's why I think it's cheap. Let us know. We like hearing from you guys. Even some of the tinfoil hats out there, and I know that you guys lurk in the vol space quite a bit. Let's move on to the mothership, the VIX options. I think we'll skip Russell's weekly rundown unless Mr. Rock Lobster, you like the music and you want to do your ableist Russell impersonation. Is that floating your boat, or should we just move on to the mothership?
We can move on to the mothership because ultimately, can anybody really replace Dr. VIX?
Someday soon, hopefully, he can actually be called that, and it'll be legal and binding. For now, though, it's just a little pipe dream we have here on the old show as he's out there chasing his various credentials to make that a reality. So, unfortunately, listeners, no Russell's weekly rundown music this week. Blame him for being out on assignment. As we move on to what's going on in the big contract, the big boy, the mothership, good old VIX options. Another fairly active week, of course. You got the Wednesday action lighting things up. The rest of the week, decent. Actually, yesterday was pretty active as well. It's averaging about 674,000 contracts and doing about 100,000 more than that, about 771. Yesterday, Wednesday, when another M on the board, 1.16 million contracts out there. So yet another million contract day out there. In VIX land, so many products out there would kill for a day like that, and VIX can put them up with seeming regularity every now and then. Tuesday and Monday, a little bit lighter, about shy of 500,000. On Wednesday, about 571. On Monday, call the put still hovering right around that 4 level. It's kind of flirted a little bit. It's got as high as like 4.1, got as low as like 3.9, but it's kind of glued. It's locked right around that 4 level. So all you people who write in about us, to us asking about the VIX call put, it's still there, hasn't really budged. And if you're wondering, Russell is still unsettled by that. He's mentioned he gets unsettled around 3, so 4 is just he's a little nervous right now. So if you put a lot of stock in that, then there you go. I think we've discussed that many times on the show, whether or not we view that as a really meaningful indicator. For my money, I wait till it gets. Let me get a little bit richer. Let me get in the 5 range or so before I'll start looking at it and saying, okay, this is something worthy of note. 5.5, maybe 6. Then we're talking about something interesting. Yet another data point on the horizon. 4, it's kind of just another blip. Doesn't really register on my radar. What does register though are the hot VIX strikes out there, the top 10. Again, for this week, what's shaping up, what people have actually put on and trading out there. There's been some movement out there, which is kind of interesting. We'll get into one of the trades that caused that in a little bit, but let's kick things off. Number 1 with the bullet. Once again, the July 20s 20 is the new 30. 25 is the new 35. That's where all the love is. July 20s, 330,000 contracts lighting it up, taking the number one spots on the top 10 list this week. Number 2, the July 25s, 320,000 contracts. Number 3, the AUG 20s. Everything 20 is hot and new again, 312,000. Number 4, the AUG 35s, 307,000. And number 5, the AUG 30s. Remember those strikes, so we can come back to them in a little bit. 287,000 open there. If you're saying, hey, those weren't on the list before, you're right. They opened up this week, and they opened up for some size. Number 6, the July 35s, 273,000 contracts open there. Used to be number 1. Now it's fallen down to, as I said, number 6 here. So getting usurped a little bit. Number 7, the AUG 25s, 222 open on that strike. Number 8, the July 18s, 211,000. Number 9, the July 21s, 209. And round out the top 10, the seemingly and comparatively far more reasonable July 15s. One of the few actually reasonable strikes here on this list, 201,000 contracts. Everything over 200,000 went in the top 10. So again, showing it's a pretty meaty time out there. Open interest reflecting that as well. 10.3 million contracts open. That's pretty hefty. About 8.3 on the calls and about 2 million on the puts. Now let's get into that activity a little bit, Mr. Rock Lobster, because there was some interesting VIX options activity. I think the number one thing everyone's talking about, in fact, our Twitter friends out here have been pontificating about this at some length. We posted about this not that long ago, and people are just lighting up with their thoughts as to why this thing went up. And we talked about it on Option Block a little bit yesterday, but it's a big one. It was that AUG vertical, AUG 30-35 call spread going up for size this week. In particular, 235,800 times. Paper coming in. Yes, you heard me right. The AUG 30-35. So fairly aggressive, shall we say, strikes. Paper buying that, again, 235,000 times for a whopping nickel. If you want to do the math, listeners, it's about $1.2 million. You say, oh, nickel, that's cheap. You do anything 235,000 times, it's going to get pricey, to the tune of about $1.2 million. So this is not just some throwaway chump change trade. It adds up. And so this is an interesting one. Mr. Rock Lobster, I'd be curious your thoughts on this one. I think we debated a little bit yesterday. Have your thoughts evolved a little bit? Why you think this bad boy went up, what the heck they were actually going for out there?
Again, I got to stick with I think they've got to be hedging some sort of vol spread somewhere, somehow, some way. And it's a pretty big chunk of paper. That's the only thing I can think of on this one. Because why would you buy that? Or maybe they have, because I'm looking at open interest, seeing if whether there's a massive, so there has to be some massive short VIX somewhere. Could it be one of the ETN traders, like ProShares or something like that? They want to own some stuff just in case. I don't know, but it's got the smell of hedging activity. Maybe Ophir has some reaching back into his dark days as a market maker, if he could come out with an alternative solution. But it's considering a week where we haven't had a whole lot of activity. It's just a big old chunk.
That is a big chunk. It's funny you mentioned going back. Ophir is the guy to go back on these trades. He is the man who runs the back tester over there. So I'm curious, Ophir, your thoughts on this crazy vertical, if you did notice it. Size, out of the money, VIX vertical call spread. What are your thoughts on why someone may want to put that up? I'll get to our listeners' thoughts on that in a little bit. And then B, I'm sure people have come in, use your back tester to price out similar trades. I'm going to go out on a limb and say it probably doesn't show that they're the most favorable of trades, but what does your backtester say about these fairly near-term, fairly aggressive, out-of-the-money VIX verticals? How do they work out over the long term?
Yeah, I'm going to say the 3.9, 3.4 delta call spread doesn't do very well in VIX.
Go figure. Crazy town.
Yeah. I'll tell you one thing I do see, though, and I don't have the timing on these. The Augie 55 calls have 85,000 open interest. So maybe, I'm just reaching here, maybe someone sold those at a nickel a long time ago, and they think, well, I'll pay a nickel, get this $5 call spread. I'm reaching here, and I think it's kind of an ARB. It's not kind of an ARB, it is an ARB. It's just for size. It wasn't. But other than that, it definitely feels institutional. quite possibly an ETN trying to figure something out. I don't think this is well, even if it's a hedge against a long stock portfolio, I don't understand this hedge at all. Why would you hedge with a 30, 35 call spread? So it feels institutional, it feels hedgy, and maybe, just maybe, it's related to an Augie 55 call that's out there that possibly was sold for, I don't know, 5 cents. Maybe it sold for more. I can't imagine it sold for more than a nickel, but it definitely happened. So it could be an interesting kind of ARB hedge play on that. That'd be kind of my best guess.
Yeah, it's interesting you brought those up. We did detail that sale. I think that went up about 2 weeks ago. Those AUG double calls. I think, as I recall, they were right around 6 cents. It's like 0.059, some weird split, something like that. But yeah, they're right around the nickel price range or so. I haven't thought of these in relation to those, but they're both equally crazy. A little bit more size on this one, so clearly he wants a nice. A little bit of juice here. But yeah, that would be weird to blast those out and then come in and also buy this vertical. But again, we've seen weirder things. This one was so weird we had to ask you guys. Usually I would save this for the Vol voicemail, but it's what we're talking about right now, so we might as well get into it now. I mean, people are full of your thoughts. We only posted this a little while ago, and the votes are flooding in. We asked you guys, hey, someone bought this crazy spread 235,000 times for a whopping nickel. What do you guys put on your tinfoil hats? What do you guys think? Why would someone buy this thing? We gave you 4 choices. We said you'd hedge some sort of OTC short vol spread, maybe some short variance, something else like that you got going on out there in the OTC land. Just a straight up spec on bullish volatility. Someone's got about $1.25 million to burn, or that someone is quote unquote hedging. We put hedges in quotes here because I don't really think anything like this is a hedge, but some people might view it as such. So we put it out there. Or to hedge an equity portfolio. Mr. Rocklobster, I know you don't view Twitter, so you're not cheating. What is your vote? Oh, I think you gave us your vote, but what do you think is winning our poll here so far? People are hot and heavy on this one.
I think people are they're hedging. Hopefully they're saying hedging. That's,
Hedging which? Hedging the short vol or hedging the equity portfolio?
Oh, hedging short vol. Hedging short vol.
Mr. Ophir, I know you're pretty active on Twitter, so you may be seeing the winner, but what do you think is winning our poll, sir?
I hope they're saying hedging short vol. I hope a speculative long Vega position is not what people are thinking this is. But yeah, my best guess is with Andrew.
Yeah, I kind of was leaning the way you guys were. I thought hedging short vol would be the far away winner, but not so much. Our crowd gets a little interesting sometimes. 35% saying hedging a broad equity portfolio is their number one choice, which is interesting. I'm not sure how reliable this hedge would be, but c'est la vie. Number 2, both the 2 I thought would be least probable. 31% saying bullish volatility spec. He's just throwing out 1.2 million. 19%, only 19% saying hedging a short OTC vol trade, and 15% saying someone's got $1.25 million to burn. That'll be up for a few more hours if you guys haven't voted yet. The vote's coming hot and heavy. Get in there if you disagree over there at Options on Twitter. And let's keep on rolling. You mentioned VXX before out there, Mr. Ophir. That's been an interesting one to watch. I asked this question to the Meatball before, and it kind of stumped him. I have it in the show notes there, so if you haven't looked already, just look away. Otherwise, you could cheat. No one would ever know. I'd be curious to you, Mr. Ophir. We talked before. You were on here talking about selling your VIX verticals, call verticals as an opportunity. The alternative, the number one use case people mostly talk about on here with VXX is, of course, buying those longer term puts and put spreads and things. So the conversation is usually around puts on VXX. You came in and talked about calls that time. I'd be curious if you had to guess right now, what is the biggest position, the number one open interest spot out there in VXX land? What would you think it is?
I shall not cheat, and I shall guess, and I shall make a fool of myself. The largest position in VXX, I'm going to guess. I'm just going to say long out of the money puts. I'll just be lame about it.
Any month floating your boat or strike or anything like that?
Let's go with Augie. Yeah, I'm going to say August.
There you go, listeners. That's how you can tell a man has integrity, because he has the answer in front of him and he chose not to look. He could have cheated, made himself look like a genius, because the answer is a bit esoteric. I would not have guessed this myself. I would have leaned similar to the way you would have there, Ophir, which is probably a near or maybe a little bit longer term, because people like to pay longer term out of the money put. But no, the number one option position out there in VXX still, the last couple of weeks it has been, are the SEP 16 calls. 105,000 contracts open out there. So someone likes some a little bit out there, a little bit upside out there. 16 strikes. So interesting stuff out there. VXX hovering right now. We were talking about those lows earlier, right around 12 right now, listeners. So out of the money calls out there in VXX, lighting it up. Bit of a surprise. Mr. Rock Lobster, does that come as a surprise to you as well?
No, I do look at like the stock twits forum. Actually, one of my trader buddies he's like stock twitting in UVXY all the time. A guy that I so it's what's amazing is how much free stuff there is about these products, and people still trade them weird backwards. So I think they are great products for what they are, but I think a lot of money gets burned buying call spreads in there. Yep. But it does not surprise me that the massive open interest, everybody waiting for the SEP 16s to, come alive. I'm just doing a vol shock now. I'm trying to see what the futures would have to do to even get us to the 16 in VXX. I think we would need like a $17 future. I'm just doing a little vol shock on a spreadsheet here to see. It would be has to be a pretty fat price. Let me see, even for the August, let's see if I did a $17 future in August. That would get a $17 future in August would get VXX to 1641. So we would probably need you'd probably 19 VIX to get there on a shock, usually because they're traded at probably a little discount to the cash. So you would need 19 VIX, and you would need a $17 August future to get there tomorrow. So every day you don't get there, they're going to go farther and farther and farther away. So it's very possible that the big open interest, people could be just, selling those things and diagonalizing the calls or something. But somebody owns them somewhere, and they're just in the sadness world right now.
I think someone listened to Ophir's last appearance on the show about a month ago and his VIX verticals and decided to just blast out the one leg and not buy the other leg, and then do it for size, and maybe he's sitting there a happy camper right now. Ophir, before we move on, any update on all those VXX verticals you were talking about? How's your back testing looking? Have you updated your opinion on those? Are they still performing pretty well? Are you still a big fan of selling these near-term, out-of-the-money call verticals in VXX?
Sell them. Put be smart about it. Risk adjust, maybe put some stops in. But yeah, it's I have a great prognostication. VXX will go down.
But take it to the bank. Take it to the bank. You heard it here first, or maybe 501st. VXX long term. Yeah, that's one of the not many set it and forget it long term kind of safe, quote unquote safe bets in the marketplace. But long term puts in VXX are kind of one of them, which is why I thought they'd be topping the list. But nope. Someone's active in some good, juicy calls out there. Before we move on from vol really quickly, I know we touched on it a little bit earlier, Ophir, but I know you like a lot of single name stuff. Tesla has been lighting it up of late. You're looking for vol, single names are where it's at. I think actually our good friend Mr. Rose tweeted out a nice chart we have in the show notes. Maybe we'll put it out for you guys as well. You guys can follow him, or we'll retweet it as well, showing the vol, the quote-unquote FANG stocks versus the VIX itself, and how interesting seeing which ones are tracking and which ones are really they're all living at this premium level that's above and beyond their own kind of levels. Looks like Amazon topping the charts there. Fortunately, we don't have FANG. Maybe should be amended to also have FANG Tesla in there, so we can see how that one would rack up. But still, interesting stuff. So if you're looking at vol, some of those FANG stocks obviously pretty active. What was decently active as well was the first week for Apron out there. Wasn't the most volatile name. It was selling off quite a bit. But overall, yeah, it's off about 25%. So for net, there was some volatility out there. We're not seeing a lot of juice priced into those options, I think, because it's been so one-sided. People are kind of just lining up on the puts, about 2-to-1 puts over calls out there in apron land. We'll see if that continues. Speaking of continuing, you guys have some interesting questions for us. So let's get on to that. Let's get on to your questions of the week. It's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys have a lot of things on your mind this week, so let's just get right into it. We touched on really, like I mentioned, our little pop quiz there about the VIX vertical. Brought out a lot of interesting theories, also a lot of interesting comments and questions going on. Like I said, those numbers have evolved a little bit, a few more votes coming in, but it's still pretty much around where it was. 35% going for the hedged equity portfolio right now as we speak. You got about 11 hours left. That one finishes up right at the end of the day. But a lot of guys writing in with different theories. Ghost Trade Killer says, someone knows something is coming. Get ready, folks. I guess that's one alternative interpretation of this. Someone knows something. I've been around long enough to know that usually isn't the case. Size money, not always the smart money, but still interesting stuff. And then we have Roger Barone writing in with an interesting one. I actually wasn't familiar with this, so I'll have to dig into it a little bit more. Maybe Andrew, you're maybe familiar with this, putting up a lot of trades on different platforms, specifically in the VIX options. He wrote in with a nugget that says, if someone did this trade at IB, Interactive Brokers, he said their margin would be $35,250,000. Anyone else, zero. He goes on with a bunch of other things. And so we actually responded to him. I said, well, what do you mean margin on a long vertical? It's just a long vertical. Why would there be margin? And he wrote back and said, and he included a link to their site, and it said they charge a minimum of $150 on any VIX spread, even if it's a long spread. He goes on, he said he wants SIBO to do. I'm not sure why SIBO would be involved in the pricing of a broker. Broker is kind of its own platform. They're free to price whatever they want. If they want to be in the business, they price things competitively. If they don't want to be in the business, maybe not so much. He quoted a link here and they to their website, and it says here on the website, brokers can induce at their own house margin requirements above the Reg T or statutory minimum. For option spreads in VIX securities, we may charge an additional minimum house margin requirement of $150. That's pretty much it, which is surprising. I've never heard such a thing. Particularly, I mean, a vertical is just a vertical. Your outlay should be kind of it, long vertical. I don't know. Mr. Rocklop, so you put up a lot of VIX options on a lot of different platforms. I know you have your favorites. In fact, we also have a question here from this related question. This might go for one of my favorite handles we've had on the show, Richard Vixen. I love that. He says, is there any way around this? And what do we think is the best of the rest for trading VIX options if you want to avoid this fee? Mr. Rocklobster, first off, what are your thoughts? Have you encountered this fee? Is this something they actually are charging, or is this maybe kind of a thing they put in their nomenclature that they may charge if they want to, but they're not really doing? And then B, what are your alternative venues for slinging those options?
I think part of what they might do that is on short option spreads. While they could probably charge you on the long, they might, in case anybody gets the willies, if they decide if people start to oversell VIX, let's just say in IB overall, and they have let's call it firm risk in VIX, they'll just start jacking the margin up to slow their clients down on it. I think that's what that's for. We use hand execution the old school way for our funds, so we don't have those problems. Actually, we get all with the exchange actually likes us. It gives us discounts on fees. So it's hard for me to say for the average VIX person that's going through, but I would be surprised if they're charging you on the line. They can, but that would still surprise me. But I do think it would be a firm-wide problem, because I know just clearing firms that I had dealt with in my past, they would have, they're clearing, hundreds of clients. And if everybody's short volatility, they're looking at their book going, holy crap, we're short a lot of volatility. Even if it's margined, they're going to take some kind of action. They're either going to jack up your costs, or they'll charge you more for risk, or for the clearing firm that I cleared for when I was a market maker, the guys that ran risk, if they thought they were too short, they would just sell a lot of S&P 500 futures against their book, and and manage it that way. So the clearing firm still has an obligation to make all those trades good, and even when there is margin, if there could be other circumstances that the average person might not quite see, and the clearing firm, it's like any other insurance company. They're going to charge you $1.50 for something that they think is going to cost them $1. So that's just the way it is. That's part of the deal. They're going to charge you more for that, but they're going to give you cheap commissions. So you have to balance those things out.
And you prefer live vol? That's your go-to platform of choice these days for slinging some VIX verticals. Live vol is a great platform for that. We use part of that for our fund, and we use hand execution for the rest. I'm trying to remember who those guys clear. I think it might be
Lightspeed.
Lightspeed.
And they clear them.
Use
That's
IB.
right. They're self-clearing now. That's right, and they go through IB, ironically. So there you go. But you don't get those fees. So yeah, there's a lot of nuance and float in those fees. I haven't had a chance. We just kind of started talking about this. We haven't had a chance to reach out to IB and kind of get maybe some clarity from them on what this fee actually is. If this is just some language in their documentation to give them some flexibility. I'm with you, Mr. Rockhouse. I'd be really surprised if they were charging this on long spreads. I mean, that would just be. I think that would drive away a lot of business for them. And this could be a fact that could be a sign from them. Maybe they don't want to play in this space. Maybe they didn't burn before, and so this kind of pricing is a subtle way of saying maybe we don't want to do that. I think that could be the case too. We'll have to dig in and find out a little more. I know, Mr. Ophir, when you're not busy out there slinging VXX, do you sling a lot of VIX options? And if so, what do you use? What do you like?
I don't trade the VIX that often. I have actually seen this before. It's an unusual time. It was back in 2008 when it was it was a Friday expiration. I feel like it was September, when it was illegal to be short bank stocks. If you guys remember that. And being long a put spread in a bank required full margin, even though it was owning a vertical. So that's the only other time I've seen something like this. I'm not sure what IBB is doing. I think Andrew's absolutely right that if it's happening, it's firm-wide risk. I don't even remember. In other words, IBB still tied to Timber Hill?
No, they just cut that loose about 3 or 4 months ago.
Okay, so then that could be sort of an archived rule that they're not imposing anymore, because it would maybe have made sense. Although still, I mean, owning it, I don't really see it. But the only other time I've actually seen this in practice and actually imposed was way back in the financial crisis on a couple of brokers. I've never seen this since then, and I don't think IB is imposing it, although, I'd hate to find out after the trade.
Yeah.
$32 million.
Especially if you're putting up 235,000 contracts. Oh wait, $1.50 a pop. That'll also add up. That nickel suddenly becomes a lot more expensive. Good stuff. We'll look into this and see what we can find out the exact nitty gritty on it. And the good old days you mentioned of when it was illegal to be short. That very brief period. What heady days those were. Meanwhile, we got to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you guys know the drill. This is the portion of the show where we all embarrass ourselves mightily, attempting to nail down the slippery wisp that is the VIX. And last week, surprise, Mr. Rhodes was the high buyer. He wanted 11.99. He was buying himself some VIX and not working out so well. Your cohort there, the meatball, has had the exact same pick for, I think, the last month, Mr. Rocklauster. Either he's being lazy or he's got something else going. He's picked nothing but 10.05 for the better part of the last month, and it actually worked out for him this week. He kind of scammed me to the downside there with 10.05. I was at 10.60, and it actually worked out for him. At about 9.75 here to close out the show here in VIX Cash. So not bad. He's not here, so I will give the pride of going first to you, Mr. Rock Lobster, because you get to have his guilt. You should get a little bit of his wins too. What are you feeling for next week, sir?
I'm going to call 9. Russell did 9.25. Since when did he go the low side?
He did 11.99.
Oh, okay.
He did 9.25 about a month ago, and it scared the hell out of everybody.
All right, I'm going to go 9.99. 9.99.
So budge in a whole 6 cents from the other your cohort's nonstop prediction. And Mr. Ophir, as our guest, you get next shot, sir. And you won't be here next week to see if you're right or wrong, so you can feel free to go crazy. No embarrassment for you. What are you feeling for next week, sir?
Yes, I can be wrong to quite wrong. I will say, after we just had the banks, and it's before the mega techs, right, other than Netflix, I'm going to say 9.75. Remarkably low.
I like it. A bold man.
I like it. This is why I don't like to go last, because I get squeezed in on all this nonsense. So I could predict some new historic lows on the downside, but that doesn't give our guest Ophir much room to live. So I guess I will go. I will be the nice guy. I'll be the charitable host, and I shall go north. Even though I'm not really feeling. Our earnings haven't really injected too much vol. But who knows? Maybe next week we'll get some crazy town, got some big names popping off, and they'll give us a little bit of juice that we need. So I'm going to go higher. I'm not going to say too much higher. I'm going to say about 10.25. So we're in a pretty nice tight range. And of course, Mr. Rhodes can't be here, so his ghost will pick in his absence. His ghost is a diehard buyer of vol. His ghost is saying 13.74 there on the upside. So if you're feeling some upside, you can join the ghost of Russell and make those thoughts heard. Unfortunately, that's all the time we got on the show this week, listeners. What a fun voyage it was through the world of vol. We talked crazy margins, we talked crazy verticals and VIX, we talked VXX, SKU, VIX futures, all that fun stuff. A lot of good stuff to check out. Glad you guys could join us. Before we go, let's go around the horn one last time. Let's start with our guest, Mr. Ophir, he of backtesting fame / infamy. Mr. Ophir, what's cooking in the land of all things backtesting, sir?
Hey, earnings season is Disneyland for options traders, right? Pre-earnings, post-earnings, during earnings. There's vol to be traded. We have ideas and backtests and dossiers on almost every major company. Just check it out at the very least. You don't have to buy it. Just look at it. There are a lot of opportunities right now in an otherwise pretty boring market. Not right now. Earnings are Disneyland.
Earnings are Disneyland. I like it. Check it out over there at, you can follow him over there on Twitter, and check him out, CML Viz. You can kick the tires. I know a lot of our listeners have actually gone over there, and I think they're liking what they're seeing. I think, Mr. Rocklops, you said a lot of your diehards are users as well. They like a good options back test or two.
They do. Actually, it gets good marks. It's simple, so I do. I have a lot of clients that use it. So I'll just say that it's an unplugged plug, but they do like it because it for us, we come up with a lot of ideas, and it's nice just to have an easy way to look at them. But for us, that we have our Saturday class, Get Your Juice for Free, or Getting Your Juice for Close for Free, next Saturday, July 20th at Option Pit. Go to our Option Pit /event page and check it out.
There you go. The man actually knows what he's got going on. If you've been that trade we talked about at the top of the show, that getting that long gamma, getting that juice for free, I got a feeling Mr. Rock Lobster may talk about that in his Getting Juice for Free webinar. So check it out over there at optionpit.com. On behalf of the Rock Lobster, Mr. Rhodes, wherever the heck he is on assignment, and of course our guest Ophir, and indeed myself, I want to thank all of you out there in the listening audience. for downloading, streaming, subscribing, joining us live, all the fun stuff you do. Keep those questions and those interesting nuggets, those interesting talking points coming. We do love to hear those from you guys. Keep voting out there as well on all the various crazy polls we have. We love to see your theories, all that good stuff. And we'll see you next week for more Volatility Views. If you're in the chat, stay there. We'll be back in about, 29 minutes for the start of TWIFO. So if you like some good volatility in the commodity space, we got some for you. Stay tuned. We'll see you there in a little bit. In the meantime, we'll put some nice options news rundowns in there for you to keep you guys nice and busy.
Volatility Views is brought to you by SIBO. When it comes to trading volatility, trust SIBO, the creator of the VIX Index, for in-depth and relevant information. SIBO's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.